This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. crude oil refining capacity rose 1.5% to 18.38 million barrels per day, BPD. This year, a government report showed on Friday as a major new expansion in Texas boosted capacity. The Energy Information Administration said the figures indicate capacity online as of January 1st, which reflected for the first time the startup last year of an about 250,000 barrels of oil per day expansion to ExxonMobil's Beaumont, Texas, refinery. The gain was a second year in a row of increases due to expansions at existing operations. Still, processing capacity at the start of 2024 remained more than 500,000 barrels of oil per day below the 2019 peak of 18.98 million barrels of oil per day, which came before a wave of plant closures and conversions during the COVID-19 pandemic.
Russian oil exporters are charging more for their oil in major market India than at any time since the war in Ukraine started, as a growing number of shippers and intermediaries take part in the trade, weakening the impact of Western sanctions on Moscow. The exporters have had to offer deep discounts to encourage shipping companies and traders to move their crude and brave the risk of sanctions since Russia's full-scale invasion of Ukraine in February 2022. Among the restrictions, the United States and European Union imposed a price cap of $60 per barrel on Russian oil sales, meaning Western shippers and insurers can only participate in Russian oil trade if the oil is sold below the price limit.
Moving on to the top news in the energy sector.
Oil futures prices settled slightly lower on Friday after a survey showed deteriorating U.S. consumer sentiment, but prices rose 4% for the week as investors weighed forecasts for solid demand for crude oil and fuel in 2024. Brent crude futures settled down 13 cents at $82.62 a barrel, while West Texas Intermediate U.S. crude futures were down 17 cents at $78.54. Brent and the U.S. benchmark gained nearly 4% over the week, highest weekly rise in percentage terms since April. Both benchmarks slipped after a survey showed U.S. consumer sentiment weakened in June to a 7-month low.
U.S. energy firms this week cut the number of oil and natural gas rigs operating to the lowest since January 2022, energy services firm Baker Hughes said in its closely followed report on Friday. The oil and gas rig count, an early indicator of future output, fell by 4 to 590 in the week to June 14. That puts the count down for the second week in a row. Baker Hughes said the total rig count is down 97 rigs, or 14%, below this time last year. Baker Hughes said oil rigs fell by 4 to 488 this week, also their lowest since January 2022, while gas rigs were unchanged at 98, which was the lowest since October 2021. Next, we have the top news in metal markets. Copper prices slipped and nickel touched its lowest in more than 2 months on Friday, pressured by a firm dollar and rising inventories that highlighted a supply surplus. 3-month copper on the London Metal Exchange lost 0.2% to $9,773 a metric ton by 16:15 GMT. In metals, risk appetite has faded recently, but that was necessary after a very strong move that was not justified at the time, said Ole Hansen, head of commodity strategy at Saxo Bank in Copenhagen.
Gold prices rose over 1% on Friday and were on track for their first weekly gain in 4, as signs of slowing inflation in the US raised hopes of a rate cut later this year, and a stock sell-off across Europe also lent support. Spot gold was up about 1.3% at $2,332.55 per ounce by 1:55 p.m. Eastern Time, 17:55 GMT. Bullion gained 1.8% for the week. U.S. gold futures settled 1.3% lower at $2,349.10. In wider financial markets, European stock indexes dropped as French assets took a beating due to the country's political turmoil. Cautious mood prevailed on Wall Street, with investors pausing after strong gains in the S&P 500 and the Nasdaq indexes.
We will now look at the top news in the agricultural sector.
Crop conditions for soft wheat in France were steady last week. Data from Farm Office France Agri showed on Friday, but harvest prospects in the European Union's biggest producer remain poor after a damp growing season. Some 62% of soft wheat was estimated to be in good or excellent condition by June 10, unchanged from a week earlier but down from 85% a year earlier, France Agri said in a serial report. The score remained the lowest for the time of year since 2020, when French wheat crops were also affected by heavy rain, the report showed.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.